Good morning and welcome to the ADS Securities Markets Update. Today we will look at most of the markets, or most of the FX market, but from a technical analysis point of view, as the outlook has become more clear after yesterday's close. Beginning with the US dollar index. Yesterday's close, or the index basically closed yesterday with another bearish pattern, beginning with or breaking through its 95.92 or 95.92 support area, which basically is stand here, and continued to and also closed below its 50 and 100-day moving average on the daily chart. In Asia, the index also kept on declining, reaching another support area, which is the 95.45, and remains well above that support until this report is released. However, the outlook also remains bearish for the time being, or negative, and at the same time another short-term retracement could be seen to the upside to retest that resistance area again, which basically will switch to a resistance from a support. However, this is also likely to be limited, and any upside rally would be also a chance to short the US dollar again. A breakthrough today's support, or breakthrough well below today's support, may clear the way for further declines ahead toward the next support area, which stands at 94.68. This is first of all 30th of June's low. In addition to that, we have the 200-day moving average on the daily chart. Moving toward the British pound, which is basically, it remains our favorite pair. The pair basically yesterday managed to test its 50-day moving average yesterday on the back of the soft retail sales data from the UK, which came in slightly less than expected. But the key point again, that core retail sales remain solid, leading to another short-term downside toward the 50-day moving average and the short-term trend line support, before rising again to a new session high, also with a daily close well above the 56.60 resistance area. In the meantime, the outlook remains, or our outlook basically remains bullish, but the pair is still struggling to break above 1.57. In the early morning hours, it remains so far above that support, above that resistance. But however, the pair is struggling to break above that support because it represents a 61.8 retracement that we mentioned a few days ago from the recent decline from 1.5930 highs toward 1.5330 lows. Therefore, it may take some time to break that resistance, but the momentum is still strong and may do so during the day. Our outlook, as I said, remains bullish for the time being, as long as 1.56 remains intact, which represents right now the short-term uptrend line support. Going forward to the euro, which basically also continued or managed to break well above 1.12 resistance level finally yesterday, right after the US session closing bell. The pair also closed strongly above 1.12, which also clears the way toward, or during the Asian session, toward a 12.95 until this report is released as well, which represents another resistance area on the daily chart. However, the momentum is also still strong, and the pair also may break above that resistance in the coming days. However, another thing, that a retest of that breaking, or the support area at 1.12 is also possible before the uptrend resumes. Going forward, also finally with technical to gold, which basically made another interesting move in the past few hours, in the past few days. Gold prices yesterday soared, or posting also the biggest daily gains since May of this year, rising toward, or to as high as 11.68 in Asia, which represents another strong resistance, which presents its 100-day moving average on the daily chart. Therefore, another short-term decline is underway right now in the early morning hours. We're back almost to 11.54. However, the closing, or yesterday's close, well above its above 50-day moving average, and the former resistance, which stand at 11.40, which also held since March of this year, and also for last year, at the end of last year in November, also remains or keeping the outlook at least slightly bullish, but at the same time it eases the medium-term bearish outlook. However, stabilization above these levels is still needed to clear the way for further gains ahead. These are the only pairs that I'm interested to follow right now, or in the meantime, or for the time being, and would wait for the weekly close in order to decide on our next strategy for the week ahead. Going forward to some technicals, or some fundamentals, today, equities across the globe keeps on declining further, despite the Federal Reserve meeting minutes to keep the interest rates on hold at least until September a few days ago. And this is also on the back of the fears from China, which continues to slow down further. Today, the manufacturing PMI in China declined by the most on record, increasing the chances for weaker GDP in China, and therefore further intervention by the People's Bank of China could be seen. Despite that, we've seen a major decline in all equities across the board. Until then, equities also may continue to face more declines ahead. Yesterday, Today in the US, the housing data and Philadelphia Fed manufacturing index came in with better than expected data. But the leading index posted the first monthly decline, which was supposed to be an increase, but unexpectedly declined back. And this is the first decline since February of this year, despite that despite the fact that estimates were to rise by at least of 0.2%. And this is one of the reasons why the US dollar failed to gain following the housing and the manufacturing data. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic reports and analysis. Thank you for watching. I'll see you again once again next week. Have a good weekend.